All right, this week we're going to do macro. Generally speaking, I never do investment updates on macroeconomics because oftentimes what I find is that people tend to do what I call a lot of hand waving type analysis, which is that generally they'll go look at what is on the front page of the Wall Street Journal or whatever is being hyped up on MarketWatch or Yahoo Finance, and then we'll give you some reaction to it. And today I just want to give you my case for BOP, bullish, optimistic, positive view on the stock markets, on the economy in general, and I suppose life in general. And yes, I'm going to invite a lot of trolling. However, that's what I would tell you. All right. So the first thing that I'll say with respect to making a great case for being BOP, bullish, optimistic, positive, is that number one, interest rates are low. Interest rates are on a very, very high level set by the Federal Reserve, which is the arm of the government that is assigned with some mixture of setting interest rates, running the economy. Depending on who you talk to, you'll get a slightly different answer. So I went and looked this up before this video. So if you were judging interest rates, you'd go look at a sort of cross-section of the economy, let's say companies, the US government, and you and me, regular folks out there. And the 5-year bond, in other words, if you're a company looking to borrow money from the bond market, you can borrow money from the bond market at 1.14% for 5 years. This is a pretty low rate on a historical basis. If you're the US government, you can borrow for 10 years. People are throwing money at the US government and saying, keep it for 10 years and just pay us 1.3%. So that's how low interest rates are if you are the US government. And if you're a homeowner and you want to borrow and take out a mortgage for 30 years, we're at one of the lowest rates really ever seen in American history. It's at 2.91%. So interest rates are very low, and the basis for many people thinking that interest rates are sort of the critical factor in determining what goes on, and which makes sense for the most part, because if you think like, well, if your savings account was going to give you 12%, well, the vast majority of people are probably just going to leave their money there because 12% is a pretty fancy rate. And your money is going to compound really, really fast if you're getting 12% a year by doing nothing, just leaving your money in a bank. And so if interest rates, on the other hand, are where they are today in a savings account, which is essentially zero, many companies will give, many banks will give you something like 0.1%. That's one of the highest rates that's out there, but effectively it's zero. So that means that a lot of people are incented to go out there and see like, hey, what can I do with my money to make a little bit more, to generate more returns, to generate something that really helps me grow my base pool of capital. And obviously the bond market says, hey, if you want to lend money out, you can get something like between 1% and 3% for a number of different opportunities. However, in the stock market, at least in our services, we have compounded over a number of years. A lot of our services have been around for 3-4 years. Profits Unlimited has been around for 5 years, 5 years. And we are at a run rate that is a little bit under 30%. So, and that's about double the S&P 500. And obviously it's significantly more than what you're getting at the bank or what you might get with bond markets. Of course, these are very different instruments, different risk, different levels of volatility, and also complexity. You do a lot to get these returns. Nonetheless, the stock market has definitely been a place that to be if you wanted big returns. So the second reason why I am BOP, bullish, optimistic, positive, is that while the headlines scream about inflation, I believe it's a temporary phenomenon driven by really a once in 100-year event, which is a pandemic. In other words, we had this pandemic that went all around the world. the vast majority of the world shut its economic engines down for anywhere between 3, 6, and 9 months. And starting it back up has not been that simple. It's not simply been like, oh, I'll just start making it. We've got a very complicated, complex supply chain where things are shipped from one place to another and then to another. So raw materials are shipped to one place where it's made, then it's shipped to another place where it's fabricated, and then shipped to another place where it is then finally put together. And then it's got to be shipped again to the end person that actually wants it. And this has become quite a difficult thing and has caused a series of price rises. It's also been an issue where certain things like semiconductors, where we've seen a step function increase in demand as a result of the pandemic, as people stay home more and more and shift their activities to more home-based activities, where the demand for computers, gaming consoles, all of these things have driven the demand for chips significantly higher. However, this is something that is also being addressed through capacity additions and is something that will sort itself out over some period of time. So inflation, if you want to look at it, I just looked up this example. When people were really talking this inflation scare up in a big way, they were using lumber prices as an example. And just to give you an example, lumber prices at some point this year were up nearly 110% on a one-year basis, and now they're down 40%. So I would tell you that the best indication of inflation is actually the 10-year US Treasury bond that I referred to earlier with the interest rate of 1.3%. Because if you think about it, if you're lending your money and planning to get it back in 10 years' time, you're very sensitive to the idea of the value of that money and what you're going to be getting back. And there's no way you would only ask for 1.3% in return to get your money back 10 years from now. So that would tell you by itself that current inflation is temporary and is going to pass, which becomes important because in the past, the Federal Reserve has increased interest rates generally because inflation is rising, going to be rising, and where there's an expectation of a continual rise in inflation. So that's macro factor number 2 in support of bullish, optimistic, positive BOP. So the third one is that the adoption of innovation is accelerating. You can go to any sector of our economy. You pick energy. I just recently got a Powerwall from Tesla, and I have to tell you, it transforms the experience of having solar power. Now I can store a significant amount of that power onto these batteries and essentially use those batteries at various times in various ways. Whereas before, the solar power was something that was a little bit dumb. It was there, and I could only use it while it was producing. Now, using a Powerwall and Tesla's app, I can actually be on a net metering system where the power company will actually buy the excess power that I generate, and I can choose. I can choose power from my solar. I can choose power from the grid. I can choose power from the Powerwall. This is a massive shift in the way we consume energy and is going to accelerate the adoption of solar power. And this technology, this innovation, this you can see in every single sector. I mean, for example, in healthcare, it used to be that for us to synthesize something like the COVID virus would have taken us years, probably 3 years, maybe even 5 years. However, within 1 year, we did all of these things using mRNA technology. We synthesized the virus, came up with a vaccine, and not only that, the vaccine is 95% effective. And we're able to come up with booster shots. All of this, if you told somebody 5 or 7 years ago was possible, they would have laughed at you, they would have mocked you, they would have scorned you and said you were an idiot. So in other words, the adoption of innovation is accelerating at increasing levels. So this is a net plus because innovation generally makes things more convenient, more accessible, cheaper, and improves life over whatever we used to use before. So this is a net plus for being BOP, bullish, optimistic, positive. The other thing about the adoption of innovation is that it is deflationary, because if you simply think about this, which is that what company is going to adopt some new technology, some new way of doing things that increases prices, that is more difficult to actually operate? The history of innovation is that people adopt things that make them more productive, lower cost, allow them to increase the size of their markets. And cost is a very critical element to it, because every company is going to invest into an innovation because they're going to chart out and see, okay, how much money do I save over what I currently have by adopting it? Because they have to put that money out up front. And the return for adopting innovation really comes longer term. So they have to make that leap of faith that this innovation is going to pay off. And they are never going to do it just for the sake of doing it. They would rather than just simply buy the old technology, even if it's a new machine, they simply go do the thing that they used to do. However, innovation has to pay off, and it has got to be deflationary, because it's got to provide something better, and not just better, significantly better than what existed before. So that is something that, again, is going to cause productivity to rise, is going to cause prices to get lower for any number of items, and generally means that we start to get more value for our money, which is the essence of deflation. And the last reason number 5 to be BOP, bullish, optimistic, positive, is the emergence of completely new opportunities, which is something that is something that you really see only during periods of extraordinary innovation and adoption of extraordinary innovation. I'm pointing to 3 places, 3 sectors that essentially did not exist 10 years ago. Profits Unlimited subscribers will know, like, we're all in on crypto. Crypto essentially begins in 2009 with the white paper for Bitcoin coming out. And in 12 years, this universe is valued at over $2 trillion. And that's the fastest pace for any asset in human history. We've never seen any other asset class get to $1 trillion, let alone $2 trillion in the space of 11 years. Generally speaking, it takes 25 or 30 years. So these opportunities are coming about as a result of the extraordinary innovation that we are currently experiencing. A second place where we're starting to really see a huge impact as a result of the adoption of innovation is the creation of the space industry, where we can realistically now envision that we are going to see space tourism, space hotels, a lunar colony. And looking out a decade or more, we can see that we are going to have a colony on Mars, people on Mars, and the emergence of an entire new industry that never existed before, the space industry. And finally, also, there is the online world as a self-sustaining universe of its own, which is called a metaverse, where things happen in the online world. Some of it relates to the world in real life, as people put it, or physical world. However, the metaverse is a brand new opportunity where people are buying land, doing various things just for value in that world. And that is a brand new opportunity that has been created as a result of the internet, computers, coding, and even crypto. In other words, we've got a stacking of innovation that is building massive value. It's building it faster than it ever used to before. And I believe that this is the final reason why it makes sense to be BOP, bullish, optimistic, positive. Now, many people will argue from various perspectives as to why this is a terrible time. We obviously disagree. No need to come and troll me. The world has a lot of different opinions on it. However, if you believe in the BOP scenario and you want ideas, you want guidance on, hey, what to buy, what kind of stocks to be in, what crypto to be in, well, then check into my Profits Unlimited newsletter. Click on the strong hands above, and that will send you to a quick 3-minute ad on Profits Unlimited and invite you to subscribe. And we'll have another video for you next week. Until then, this is Paul saying bye.